Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
Coming to you live from downtown Detroit,
I will buy
this
the
is
stock.
Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
Coming to you live from downtown Detroit,
I will buy
this
the
is
stock.
Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
Coming to you live from downtown Detroit,
I will buy
this
the stock.
is Benzinga's PreMarket Prep. Your host, Joel. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep.
I will buy the stock.
Your host, Joel. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep.
I will buy the stock.
Your host, Joel. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep.
I will buy the stock.
Your host, Joel. Coming to you live from downtown.
Good morning, traders and investors. Welcome to the Monday edition of Benzinga's Pre-Market Prep. I'm Seth Blazowski, filling in for Spencer Israel, here with Joel Elconin and Dennis Dick. On today's show, we are going to be talking about another volatile week looking forward, futures back in the red, GS stoking recession fear from the trade wars, and unrest in Hong Kong. We have a big week this week. We also have the Detroit Cannabis Conference heading in on Thursday this week. Big conference that we host here at Benzinga for people to invest and trade in the cannabis space. Additionally, today's guest is going to be Reverend Emmanuel Lemelson, who will be talking about he is the founder and president of the Lantern Foundation, and also the chief investment officer of Lemelson Capital Management.
All right. Thank you, Seth. Here we are on Monday morning. Mr. Israel sitting things out here. We're getting it going. S&P futures trading in a red by 18 and a quarter handles. We tried to rally last night back into the 28.30 handle. 29.31 your pre-market high, 28.93 your pre-market low. So pretty big range. Like to see us get back above the close from Friday. I think that's going to be a big level moving forward. That's 29.1975. Crude in the red by 35 cents at 54.15. Gold in the green by $7.40 at 15.90. Silver still trying to clear 17 for good. That's up 1.9 cents at 16.95. Bitcoin can't hold 1,200. The Bitcoin futures trading 400 down $490 at 11,455. Triple D, we're going to bring you in here. How it doesn't seem like this was like a really long weekend.
It does. I feel totally disconnected from the market. And you want to know something? It was a long weekend for me because I took Friday night off. I never take any time off, but I had a friend come up. We did some boating, and this was an interesting boating adventure, I'll tell you that much. But anyways, so I stopped trading at actually 10:30. So I not only took Friday night off, I took Friday afternoon off as well. So stopped trading around lunchtime and didn't trade the Friday after hours. So I can't tell you what happened Friday after hours, although I don't think much from what I see. But over the weekend, it looks like a lot's happened because we're selling off here again on the futures.
So who do we want to, there always has to place some blame, right? It got Hong Kong protest, right? I think that's something that's, it's still basically going down to the trade wars, the uneasiness over interest rates. Goldman Sachs didn't really help things today when, they're talking about, so there's a couple different catalysts here, but
I'm going to say the TLT too. This market, I'm going to say it again. Often the banks are inversely correlated with the TLT, but right now the market is inversely correlated with the TLT. If you bring up the charts and look, you'll see what I'm talking about. When this TLT starts to rally, the markets seem to sell off. I don't think it's coincidence that the TLT is strengthening here once again. This market is worried about rates and where they're going here, and with the explosion that the TLT has had over the course of the last few weeks, I think that's the main concern here. So this market's actually worried about rates going lower.
Yeah, it's worried about rates.
Isn't that funny? They're right there to defend the market by lowering rates. And I think a lot of this is the catalyst for why we've had a lot of uneasiness here.
I know. Have you seen a market that's reacting so negative? I mean, maybe
No.
yeah, maybe because they're not low enough. I mean, is they're just not going to be
I
happy?
don't think it's the case. I think this market I think the U.S. economy is humming along, and the U.S. market's obviously been humming along, and now we've went full dovish on the Fed and the lowering of the rates here. And I forget who it was. I think it was on Friday on CNBC. Somebody was commenting anyways. But I mean, unbelievable that the market is actually reacting in a negative way, it appears, to lower rates. So I'm not sure what that's all about. I mean, banks always have done that, at least in the last 5 years. But now it appears the market is doing it to a certain extent. So anyways, those are my thoughts.
All right. Well, let's not much earnings to speak of this morning, right? We did have, did Cisco get their report out? Food stocks, Cisco Foods, SYY. Let me check my my calendar here. And,
It's trading up $1.66, so I would assume so.
okay, I got it. They got a Q4.
Joel's running the news desk here right now. So give us the news here. How'd Cisco do? SYY. We're not talking CSCO. We're talking the food stock SYY.
Fourth quarter adjusted EPS $1.10 versus estimates of $1.06. Sales a little bit light, 15.5 billion versus projection of 15.65 billion. So must be selling a lot of that oil or whatever. But overall, for food stocks, man, they've been in the dumper. This one looks okay today, though. What are you seeing out there?
All the food stocks have actually held up okay, considering what Kraft Heinz has done. So we're seeing SYY trade higher here, but I'm still looking at, Kellogg's and Campbell's, and they've actually all held up fairly well. I mean, Hershey's just continues to roar. So it's been basically, when we think about Kraft Heinz, I think the food stock's been in the dumper. It's not really the food stocks. Pretty much just Kraft Heinz has been in the dumper. So the other ones have held up okay. I mean, they haven't been fantastic performers, but a lot of these stocks, you're just in them for the dividends anyway. So it's not like they really, Kellogg 3.67%, Campbell's 3.35%. So you're kind of just in them for the dividends, and you don't expect that much capital appreciation. It's when you get the capital depreciation that is an issue. So SYY trading up $1.70 or $2.60 or $2.26. It's a nice lift. $73 is some size there right now on edge. If I just look, at 73.14, the high from July 15th, back 73.79. I mean, there is some overhead supply you're starting to run into up here. And then if you get above there, 75 is huge, but it is a food stock. I'm not chasing any food stock up $2.50.
Now, 73 is an interesting area, Dennis.
It's ticking there right now.
We're trading right now. 3 highs there. Well, actually, you call 4 highs back in mid-July at this area. So let's see what happens. See if sellers come in here above things. Man, there's really not much above that. So let's see if you can consume all the stock in the 73 handle. I'd be keeping that is my level for the day. After that, things open up to 74.5, 75. The way this market's been acting, the way these stocks have been acting, I'm just, I'm not going to call a top or a bottom in it. And I could just tell you that we're sellers at 73, and that's where we're at right now. And then the other one, Dennis, we're going to have to figure out what to do with this stock here.
What do you got?
Group, TSG. We had
a really bad one.
Joel
and I both own this one. It bounced back the last few days, but this has been the dog of all dogs. And you know what the good news is? What you were saying last week. It's not the one thing in your long-term portfolio. When the stocks start going down, they become a lesser part of your long-term portfolio naturally.
What happened?
Going down, we won't even have to worry about it. We'll just write it off. Been a terrible stock.
I mean, we were looking to capitalize on the gaming industry, right?
Yeah, sports betting. We thought this was kind of a pure play to play the sports betting. And obviously maybe it's still a pure play for it, but that play has not worked out at all. I think we're down, 40% on this thing now. It's been awful.
Yeah, they came out, estimates were at 57 cents. They came in at 48 cents. The revenue, though, is not too bad. The estimated revenue.
Silver lining?
look at this revenue. I don't know. Maybe they're just not changing their revenue estimates because it's been the same for the last few quarters here.
Rallies to be sold. Talking against both of our stocks here this morning. We should just dump this thing and get out, I think.
Yeah. Or
I think it's going to be an under $10 stock eventually. We probably should just dump it and eat the loss, Joel. I have a little bit of loss aversion happening on this, though. That big pop back in May. We thought about it. It's when we needed to dump. That's when they did the deal with, I don't know, they did some deal. I can't remember with who it was.
With somebody. It was a partial.
Yeah, man, that was the selling opportunity. So you know what? When you got 100 stocks in your long-term portfolio, they're not all going to be doing well. Should get rid of the dogs, though. This one's been a dog, so I don't think anybody should be adding Stars Group.
Yeah, but we got into it.
Out.
We should double. If there's a stock that we should double down on, it's this stock, right? Because
don't never frown. Average down.
Exactly.
That's your saying.
All right, we
We're
will
not bad on this one, Joel. Anyways, down another 7%. It continues to be a smaller part of Joel in my portfolio.
add it. Maybe we'll do a merger with Kraft Heinz or something.
Well, you know what? When me and you put a stock in our portfolio together, it's usually bad news in the long-term portfolio. You know, we're pretty good traders. I don't know. You know, I think about this a lot. I have this conversation a lot. I know I'm a pretty good trader. I've made all of my money and pay all of my bills through my trading. No other source of income. So I know I'm a pretty good trader. As an investor, the jury's still out. You know, I think I'm a decent investor, but I definitely have some ideas like the Stars Group that don't pan out. So I guess you're never going to have 100%, you know, batting average here. So you try to bat as well as you can, and obviously above 50% if you can. But I've had some bad calls too in the long-term portfolio, and I still say that the best thing my best stocks, my long-term portfolio, are the ones that I just never traded. I just bought them and forgot about them. And, you know, there's maybe a dozen of those, you know, or more that, you know, I've had for like better than 10 years. And those are my best performers and just, you know, reaping the benefits of the overall market. So I don't know, maybe I should start ETFing. I just go in the long-term portfolio and buy the ETFs and not worry about the individual stock performances, because the Stars Group style stocks like this make me think that individual stock picking long-term, it's a difficult game.
Yeah, that's kind of what saved me on a lot of things. But we got after the close. This is really not a important stock at all. What do we got after the close today? Just Dave, DA.
There's not much, but we do have quite a few coming up this week. So I'll give you some ideas here. I was trying to I retweeted Option Millionaires. He had all the stocks that were reporting, the big ones that were reporting this week. And I'm trying to navigate the new Twitter here right before the show starts. And I'm like, I can't even figure out how to see my tweets. It's that confusing. Like on the mobile, it seems to still be similar. But on a desktop, Twitter, I can't figure it out, guys. Like it's a mess. And maybe it's just because they changed too much.
Yeah.
I'm like sitting there and I'm like, how do I see my tweets? I don't know how to see my own tweets. So anyways, finally, I scroll down, like the 7th one down, you can hit profile. And then you can go there and then you can find tweets under your profile. But it's confusing, that new Twitter. So I don't like it at all. I mean, maybe I'm a creature of habit, so I don't like change. Maybe some people like the new Twitter. Let me know if you do like it, but I do not like the new Twitter whatsoever. And even when I'm trying to tweet something on a desktop, and not that I tweet a lot, I tweet like 3 times a week or 4 times a week. I don't tweet very much at all. I probably should tweet more. But I was like trying to tweet, and I was like, how do I even tweet? I'm in my timeline. I'm like, I can't even find the spot to tweet. So then I got to like scroll all the way up to the top, like even right now. So I'm on my profile page. I cannot see where I can make a tweet from my profile page. It doesn't say, I can search Twitter in the corner, but there's no place for me. Like I'm right at the top of the page. I see my profile. I don't see any place to tweet.
What about home?
I guess you got to go to home, and then you go to home. But if you scroll down your thing and you're looking through, like you've got to scroll all the way to the top of the page to go find a spot to tweet. It's hard. It's a hard thing to navigate.
They just snuck that in there too, didn't they?
I don't know, man. Yeah, they just snuck it in. I didn't expect it. I was just like, I brought up Twitter and I was like, oh, it's altogether different. I was like, okay, cool. And then I'm like, well, I don't know how to do anything now. You know, and again, I'm a creature of habit, but I'm like, things are all in different spots and trying to figure it out. And man, I guess there's a big tweet button there. So I guess I could have just hit the big blue tweet button. I didn't see that. There's a big blue tweet button, Joel. I guess I just needed to hit that. But anyways, annoyed by the new Twitter. It's going to be an annoying Monday here. So let's move on here. What has Twitter stock been doing?
Yeah.
Day traded, but overall, Oh, you know what? It's held up pretty good since the earnings. Held up pretty good. What do you think?
Yes.
You own it.
Yeah, I'm just holding on to it. I mean,
Those are the best long-term stuff. It's best you just hold on to it and forget it. Because when you trade out of it, sometimes you do good timing and it comes in a couple points, but then you forget to rebuy it and you end up looking back 5 years later and you're like, why did I ever sell that? So if you believe in the long-term story, sometimes it's just good to hold on.
Let's talking about long-term stuff here, and the reason I want to bring this up is after the close today, HUYA reports and YY reports. I've been looking at this Baidu chart here.
Oh my goodness, Baidu's a disaster.
But I mean, I know these are horrible looking charts, okay? And so technically there's no reason to buy them here.
Yeah.
But don't you, I mean, man, I don't really have any exposure over there. I mean, this deal is eventually going to get done, right? Isn't that going to be good for China? Isn't it going to be good for, I mean, I hate trying to pick a bottom in these things here, but there's a point where you got to give yourself a little bit of exposure, don't you think?
Bring up the EEM, and we've talked about this over the last 10 years. Can you bring up that chart and show everybody right now?
Longer term chart.
Bring up the EEM. This is obviously emerging markets. Let's go look under the hood and look what it owns. You know, it's always a fun, segment to obviously look what exactly the EEM owns. But look at the performance over the course of the big bull run that we've had in the US stocks over the course of the last 7 or 8 years. And look at the EEM. Look at it. Is that not incredible?
Go to a monthly on that one.
Go to the monthly and look at
it. Nowhere.
No, down.
Down.
In 2012, we were $45 with 39. So in 7 years, your return on the EM, and I guess, you could argue, some people are going to argue, no, it's positive because you get a dividend. Wow, 2% dividend. I think it isn't really that exciting. But in a market where the SPY in the same time period has went from 136 to 300, so up 150% or so, the EEM is down. It has been terrible. The top holdings in EEM are Tencent, which is obviously not traded over here, and it's over the counter again. Alibaba's number 2, 4.4%. Taiwan Semiconductors, 3.79%. Samsung Electronics. So all those names. They're all big names. These are the top 4 holdings of the EM. And then it goes down. It's got the China Mobiles and Infosys, and there's other ones in there too. But what a terrible performance it has been for the EEM. So, we keep thinking, how well this market's done. It's been a U.S. market rally here for the last 5 years. It has not been a rally everywhere else. So question is, when you're looking at the EM, you're obviously buying, a country, and you're buying a lot of countries over there with the emerging markets, but, mainly China. You're saying that, okay, U.S. has outperformed. Eventually the EM is going to play catch up. Maybe, but it's been lagging significantly. And if you've been playing that and trying to play that for the last 2-3 years, you've been wrong. It's been just an awful performer, the EM, and Baidu has been the worst of the worst. I mean, this stock was $284 back in beginning of 22, 1 year ago. It's $97 here today. I don't know what's going on. Is there value there? Maybe, but I've been in a lot of value traps. So again, the strong get stronger. Agreeing with Spinner too here. The strong get stronger. The weak get weaker. This tape is just like Groundhog Day around here. Valuation be damned. They don't care about valuation. All they care about is what is strong and what's got a story, and what is weak continues to get sold. Did we lose you, Joel?
No. I'm just looking at this chart here, and I mean, isn't this like the Google of China or something like that? Isn't that the
what they used to say?
Yeah.
The case or not, though.
No, I mean, based on, everything you're saying, it's, hands off. Instead of buying this, you should buy Roku and Shopify.
And somebody, and I had, somebody calling me again, another person on Kraft Heinz again this weekend, asking, hey, this or not, or the email, and they're asking, what do you think? This is really cheap here now. Well, I read that, I think it was Canaccord note, and I'm like, they got debt issues. They've got the perimeter shopping issue. I mean, we went through all this on Friday, but I mean, there's so many issues. I mean, I don't know. I don't follow the Baidu story closely enough to know what the issues are. But when I look at this chart, it tells me they have issues, because Baba's chart doesn't look like this. I mean, Baba has underperformed, but it doesn't look like Baidu. Baidu's, so the EM's gone nowhere in the last couple of years, where Baidu in the same time period is down 60%. So the individual stock story here has got to have some other issues that, I don't know about. So maybe do some more homework and research it, but just coming in here and buying Baidu at 97 saying, oh yeah, it's cheap here now. I don't know that. You got to jump into the individual story, because Kraft Heinz looked pretty cheap at $50 as well when it used to trade 90, and now it's 26. So it's been a difficult market to try to call bottoms in stocks.
Spinner's saying they lost their CFO about a year ago, and it's been straight down since. I do remember, like, it had a big down day, and I can remember, and it never, on the monthly chart, it never recovered from that. So I'm not sure if that was the catalyst or not. But if you're doing some research on that, there's where a change in the C-suite has made a big difference. And then I looked at like why, same thing. Just straight down. That's
awful chart.
Yep. What is there? HUYA.
Some of these are valuation issues too. I mean, the HUYA was a bubble, and we played that, and it was a great trade back in June of 2018 when the thing was exploding from 25 to 50. But that was, getting overdone. The same thing there was three of them we were trading all then in the chat. They were trading them very well. BILI was one of them, and there was HUYA. And there was SOGO for a while. We were trading that one. And then there was another one too. What's the other one? HUYA, IQ. And it went from like 20 to 45 as well. These stories were all valuation issues. They probably just got too hot, probably wasn't justified. I mean, maybe a different story, but they've obviously cooled off significantly since then. And they're all of a sudden, all of them are in downtrends, and they've been in downtrends for a while. So again, stocks that are in downtrends, it seems like the play is to sell the rallies. Stocks that are in uptrends, the play is to buy the dips, and we're talking long term. So, and like, I'm talking the long term chart for the short term trade.
All right, let's before we got our guest coming up at 8:35, that's Reverend Emmanuel Lemelson. He's going to talk about Ligand, which is a stock he's been bearish on for a while. It's taken for a while for it to come to fruition, but we'll talk to him about that. What else is in his portfolio, what he's looking at, what he's nibbling on that. So we'll be waiting to talk to the father at
It's always nice to get some perspective. I mean, he's your classic value trader. So he's looking at stocks that are cheap. He's buying the ugly chart. Sometimes it works for him, sometimes it doesn't. But exactly what we were saying, it seems to be, easier to make money when you're buying the stocks in the uptrends. He's doing the opposite. He's buying stocks that are basically being sold, and he believes they're being sold too low. So he's looking classic valuation, not really caring about the charts. That's why it's always interesting to get that perspective, because he's your classic value investor.
All right, let's take a look at a couple ratings here.
I was going to go back. We went on a terrible tangent here, Joel, on the Twitter, but we were trying to talk about the earnings this week, and we talked HUYA. So obviously there's some big names that are reporting that aren't HUYA. I'll give you the rundown. You can pick your poison on what charts to talk about. But there's Macy's. So we're starting to get a retail earnings season. Macy's. Cisco is always kind of the end of tech earnings season, in my opinion. Obviously there's NetApp here this week too. Or no, NetApp already reported, I thought. Anyways, or they pre-reported. Cisco CSCO is the big one. I bought Cisco for the long-term portfolio last week. Stock I wanted to own for a while. I bought it off that triple bottom of 51. We'll see how it does. Don't love the idea of taking it through a report, but the expected move is only 5%, so I'm not going to sell it ahead of time. I believe does NVIDIA report this week? I believe it does.
Let me take a look.
I believe it does, and that's going to be a big report there too. Expected move 8%. So yeah, so NVIDIA does report this week. We've also got, like I said, the start of retail earnings season. So we're going to hear from Walmart. We're going to hear from Canada Goose. We're going to hear from Macy's. JD.com is going to report. So we've got quite a few stocks coming here. Let's go look at the NVIDIA chart, though. This stock, this is the argument, I guess, long-term investing and not looking at, because I bought this thing at 150. It went to 180, or actually went to 190. Came all the way back down like 130, back to 175, back to 150. I've been all over this place, and I'm up nothing now. So I was up big money, down a little bit, up big money. Now I'm back to scratch. I'm sticking with NVIDIA. I still think chips long term. I think it's a good company. I think I'm getting it at an okay price. It's not crazy cheap here, but it's not crazy expensive either. So I'm sticking with it long term. But thoughts on the chart, NVDA?
Hanging out near the lows of the move here, right? We're traded down a $1.43 and 152.75. I think you got a pair of lows to lean on here: 148.90, 150, 149.20. So that's what you need to hold here. It probably looks some people trying to bring a short here and ahead of the report, but that 150 area looks like pretty good support. Longer term, you've just been hanging out in this area. It seems like AMD has been a little bit more, in flavor here in the chip sector, but
it's been the one. AMD has been the stock that everybody, and they don't care that it doesn't make money. So it really has not made money. It always makes like 1 or 2 cents. I mean, I think eventually they think it's going to be all AMD. So AMD has been the best chip performer here by far for a long time. So are they eating NVIDIA's lunch? And we know they've been eating Intel's lunch a little bit. Are they going to start? Is it going to be the best in breed here eventually? I'm not sure about that. I always thought NVIDIA was best in breed, but AMD has been unbelievable for a while.
Yeah, it's and AMD has been 34. If and when this thing can get up and stay in the 34 handle, maybe clear 35, I think you got another measured breakout here, but you haven't been struggling. On the upside here, for NVIDIA, looks like you got a little resistance here at 160, but that, I believe, is not until Thursday when we get that report. Let's take a look here at Macy's. Where's that? I haven't looked at this chart. Oof.
Awful. Just getting the beats. And retail, we've been talking about 2 sectors that continue to disappoint are oil stocks and retail. And I mean by retail, I mean like the department stores and smaller retail. Walmart, Target have still held up pretty good. Costco's been a great stock. But when you're looking at, the Macy's, the Dillard's, the Nordstroms, the Kohl's, these things have just been awful. Macy's has been leading the charge on the downside. It's now through the support at 20, 7.79% dividend. That's nice and all, but I mean, they've got major problems here. These are huge stores. We know they've got Amazon issues. We've got all kinds of issues happening. Been a value trap for a long time.
I went out to the mall yesterday with Lisa, man.
Were you at Macy's?
I went by Macy's, but
you see people in there?
There's people in. The parking lots were pretty full. I don't know where the people were at, but big old hole there where Sears was. Just I don't know what.
Which mall were you at?
12 Oaks.
Oh yeah.
Yeah, so I don't know what they're gonna get to.
Devonshire Mall is the same thing. The big mall in Windsor is a big old hole where Sears is. There's a huge end of the whole mall because they were such big stores, and it's been sitting there for 2 years for lease. Who's leasing that? I mean, they have to almost like tear it down and like rebuild smaller like boxes for it because the store is just too big. There's nobody coming in there and leasing that big of a store.
I mean, unless Amazon comes in and just lowball.
But when Amazon does it, they have they're not going to be that kind of size of a store. So I don't know. I mean, I look at that and I think this isn't just a 12 Oaks problem. I see this in so many malls. The Sears left big holes in a lot of malls.
All right.
And the question is, are Macy's, Nordstrom's, are these going the same way of Sears? I mean, really, if you're not buying it here, you've got to have that thought in your head because it's got a 7.79% dividend in an environment where people are paying, you think about negative interest rates and everything in these other countries where people are paying you to take their money. You got a 7.79% dividend here. It's huge. This one I want to ask Emmanuel Lemelson about too, because this is a classic. What's he when he looks at something like this? But when I look at this, the reason I'm not buying Macy's is I think it could go the way of Sears. I don't know if it's going to, but I think it's possible. And if it's possible, that tells me there's a lot of risk. And do I want to jump in, in a potential situation where you've got some major issues for a 7.7% dividend? I mean, you got the capital appreciation possibilities too. It was the good play when Macy's got back down here in 2017. Because it went down to $17 and ran all the way back up to 40. Is it going to do it again? I don't know. I mean, you do have some support down there when you get to that 17. It'll be an interesting level when we do challenge that 2017 low of $17.40. But It's going to be an interesting earnings report for Macy's.
Yeah.
Again, expectations are going to be very low though. So maybe it's a play, like maybe it is a play because the bar is going to be set so low. I mean, stock's been going straight down. Maybe they'll be able to beat that lower bar. But if they lower guidance or they say something negative, I think it'd be $15 in your face.
Yeah, I mean, you think about 7%, right? I mean, okay, so it's a haircut. I mean, but if they cut the dividend, there's going to be a lot of selling. If they eliminate the dividend, then all those funds that are holding it just for the dividend, boom, are going to be out. So
well, that's what happened with Kraft Heinz. They
Yeah.
cut the dividend, and the thing, went from 40 to 30 because they're repricing. And now they're talking about, there's rumors, obviously the investor note, I think it was Canaccord from Friday, saying they think that's going to happen. So the dividend on Kraft Heinz is back up to 6% again because the stock's fallen so far. So the new half dividend is now 6%. And then we look, but is it safe? So Macy's the same thing. Is the dividend safe? That is the question. If I thought the dividend was safe, I'd be buying the stock here right now. I don't think the dividend is safe. That's why I'm not buying the stock.
All right, Dennis, we just passed the 8:30 mark in the show. S&Ps have come 11 handles off that pre-market low at 28.93. Anything in imbalances?
GE 188,000 to sell every day, every morning. We see the big sell and bounce in GE. It's been going on for 2 years. This institution has been dumping a couple 100,000 shares every single morning for years. It feels like now has been absolutely right because the stock continues to go down. Everybody has tried to call the bottom on General Electric a bazillion times. The bottom has not, yes, we, have rallied off since the lows when we got back down to 666, which is always interesting back in December. But I mean, now we're $9. We look like we're potentially going to fall under $9 here this morning. This story still looks very, very broken to me.
And the other thing I wanted to ask you about, and I think it was on Friday, you were trying to buy that triple BY got the upgrade. I know you were trying to buy it. It ended up getting kind of slammed on.
I did not buy it. I thought it might be day trade, not investment. Definitely not investment. But Emmanuel Lemelson's going to come on here. But they sold it right in it. This is just the same thing. Selling stocks in the strength. Even when they get upgraded, they go down. I mean, I played it once for a little swing trade. I got a nice little 50 cents or 70 cents off of it. I'm glad I didn't get filled on it at $9. But again, you've got to have it out. So even if you're trading something and saying, okay, if I can get it at $9, I'm going to buy it. Don't get stuck holding it. I mean, don't get stuck in, when it doesn't respond well in the first 10, 20 minutes to an upgrade, it's telling you it wants to go lower. So I never looked at the chart after the first, after the pre-market. I had an order out there to buy it at the open at 905. It didn't get filled. That's why I put an OPG. I never looked at it again until now when he just brought it up. And I mean, this chart is just ugly. So does the Reverend own this one? I think he does.
Yeah.
I want to ask what he's doing. He's coming on. Let's bring him on. Let's bring him on because it's a good conversation because one of his stocks we're talking about here. I mean, this is another just value trap. It's been a value trap. So I think I'm going to be on the other side of the Reverend here.
Okay. All right. We're going to take a quick break here. Can you mute us here, Seth?
I think he stopped the stream. Joel, I think he stopped the stream. Maybe we're up now.
Hello, Reverend. How you doing?
I'm good, thank God. Joel, how are you?
Yeah, no, don't bring him into this. Me and me and Spencer figured, not Spencer, me and Seth figured this one. Spencer's out for a few days. Let me properly introduce you. We're on the line with Reverend Emmanuel Lemelson. He's the founder and partner of the Leonard Foundation. He has been a guest on our show over the years, discussing different stocks and his portfolio, different things in the markets here. So, Reverend, I wanted to bring you in here appropriately. How you doing this morning?
Thank God, everything's good, Joel. I'm just happy to join your show again. I was a little worried I got on your blacklist or something. I haven't called you for a while.
No. We just have so many guests applying to be on the show. It's just hard to figure out. But
Well, I'm humbled and grateful. You still consider me worth getting on your show.
For sure. First, before we go into some of these individual issues here, and I know Dennis has a few questions for you.
Sure.
Like this overall market here. I mean, there is so much going on that you or I or anybody doesn't seem to have any control of. What do you say to like let's say a new investor, someone that they just graduated college, they just got a good job, they have a little disposable income here, they see the market down 1,000 points one day, up 400 the other day. Just what calming words would you have for, let's just make it a new investor to the markets?
Yeah, sure. So, I think for a young person approaching the markets, we should generally think of the U.S. markets, especially, as being, above average productivity versus other asset classes. And, they have to probably make a decision early on. Do they want to be really a passive investor? I mean, they could buy an ETF in a case like that. If they want to be active, which of course I'm a big fan of, they really should think of themselves as owners of productive assets. And more specifically, in the case of common stocks, owners of pieces of U.S. companies. And to that end, if they're willing to do the work to understand what those companies are, what their economic performance has been historically, and what the economic prospects look like in the future, which means learning to read financial statements, they should feel a great deal of confidence, regardless of what the market at large does. So, if the market goes up, not everything goes up. If the market goes down, not everything goes down. And they need to probably be able to delineate in their own mind the difference between a price which is quoted in milliseconds on the market, a blinking red and green number on their screen, and what the actual underlying performance of the company is. The real difference is, do you believe markets are efficient? A lot of people believe that every bit of news which hits the news wire will affect prices, and prices reflect value. But there's a small group of people who don't really adhere to that viewpoint, and they think that prices can be associated from true value from time to time. So, if that's true, if you see these price value dislocations, and they occur in much more frequent cycles in public markets versus, say, real estate, for example, then those are really opportunities for people who are patient and willing to sort of learn the language of business, which is accounting, and to be able to read the financial statements of companies.
Okay. All right. So let's talk about a stock that man, you've been following for a lot. How many years have you been following Ligand Pharmaceuticals? And it's a stock. You've done a lot of.
It's been a 5-year fight, right?
Yeah, and you've done a lot of research on it here. You've seen, you saw the ups, and that stock up to $270, $280. Just hang. I was looking at this one, and Dennis and I call this like hanging on a cliff formation, just on the dailies here. You got 3 lows at 88 and change, but give us your fundamental perspective here on this one, your price target, and what's taken so long for the street and regulators to look at this company.
It was a great question, Joel. I'm not a chart reader, but I give a lot of credit to chart readers for their colorful expressions. I like that. Hanging on a cliff. It's been a 5-year fight, Joel. We came across Ligand, and nothing looked right in what we were seeing in terms of the financials. And we declaimed openly against the company. We've made, close to 1,000 allegations about the company, including business accounting and securities fraud. We always did that openly and transparently, never published anything under a pseudonym, made all of our research available for free, 55 pages of initial research. We've given 11 interviews on your show. I guess this would be the 12th where we discuss it. And I have yet to find anybody, including the Securities and Exchange Commission, who's able to come forward and point out where anything we have said has been incorrect. Now, since that time, a number of other prominent research houses and analysts have published substantially the same claims we have, including Grant's Interest Rate Observer and Citron, run by Andrew Left. I think, if we have a sin, our sin was seeing it too early. So long before there was Valiant or Martin Shkreli, by the way, Martin Shkreli, former business partner of John Higgins, CEO of Ligand, essentially some articles indicate that he put Martin Shkreli in business, in fact. Long before that was a bipartisan issue, even in Washington, D.C., we had identified it. And, we're very proud of that. And not because we profited from that short position, but because each and every one of us, Joel, has a responsibility, if we uncover malfeasance, to speak out against it. And, short sellers are unpopular to begin with, but my position has long been, and perhaps this is where there's a point of controversy, is it unethical to short an unethical company? I don't think so. I think that's a contradiction. And where you have a fiduciary responsibility to investors and you uncover fraud, so long as you make it available publicly, your research, and for free, and you do the things you should do, which are civically minded, like filing whistleblower reports, of which we filed 3 whistleblower reports with the SEC on Ligand, I think it's not only acceptable, I think it's completely ethical to short a company like that. Now, drug companies and drug prices are really a major issue in our country. It's a contemporary issue for all of us. We should be concerned about it. There's not a day that goes by I don't hear from somebody who indicates some price of some drug they have has gone up. What these companies are doing, these new breed of pharmaceutical companies, they're really exploiting loopholes in the system, both regulatory loopholes and accounting loopholes. In the case of Ligand, we've said they've gone even farther into accounting fraud. That's been our allegation. And we think that's been borne out to an extraordinary degree, Joel. And it's reflected in the stock price. So stock has fallen as much as, I think, about 70% since late September. So what is that, 10 or 11 months? And, we wrote a letter to Congress, an open letter in July 2018, and we said essentially the stock is set to collapse. That wound up being extraordinarily prescient. We covered our highly successful short positions in 2014, 2015. We shorted again profitable, and we'll ride it the whole way down this time.
Reverend, Dennis Dick here. Talk about the process, like if you can talk about the process of like uncovering a fraud and what's your research, like how you go about doing that. I mean, Citron does this, you guys do this. There's obviously other companies that do this. So what is that process? Like what makes you, first of all, look at something and say, hey, something might be going on here. And then secondly, how does that, how do you do your research to uncover stuff like that?
Yeah, so it's a lot of work, Dennis. I mean, you have to really enjoy reading financial statements. Different types of short sellers, in my opinion. There's a group who do excellent work, like Andrew Left, or others, prominent names on Wall Street. And a lot of times they'll just look for sort of the obvious operational frauds. Like Andrew Left, one of the things he deserves a lot of credit for, in his short report of Ligand, he made the same claims that we made, but he did it with photographs. He went and he photographed. We said that these purported licensees of Ligand were essentially shell companies, was the words we used, and that they were alter ego entities of Ligand. That's a legal term. He just went and took pictures of it and showed the empty office, whereas I wrote 55 pages of academic research. He sends out a 10 or 15-page PowerPoint presentation just showing photographs. They say a picture's worth 1,000 words, right? So, one's like a massage parlor or something. I don't remember exactly what it was. And the other one was some sort of multi-level marketing business that was registered to somebody's residence. And these were companies that Ligand was saying was going to produce, enormous sums of future revenue and royalty revenue. So that was really pretty powerful. But for us, we take a slightly different approach than some of the better known short sellers. I mean, it's really security analysis. So when we're looking at the financials of a company and we're reading the filings with the SEC, if something seems intentionally obscure or cloudy, usually it's for a reason. It's not because the accounting people inside the company couldn't figure out how to explain it to the investors in a clear way. And there's not really that many different flavors of accounting fraud, frankly. So they've all been seen before. None of them are new. For example, what we've alleged in the case of Ligand is not terribly unlike what Ligand Pharmaceuticals did in early 2000, 2001. So, it's all been seen before. And really the driver, is incredible as it sounds, it's always greed. And greed is irrational. It's as irrational as fear. And you ask yourself, why would these executives do this? I mean, why would they put their future in jeopardy? And it's not rational. I mean, I think greed just drives people to do things which are not right. And you look at John Higgins, for example, in the case of Ligand, And according to some reports, he's one of the highest paid CEOs in, I guess, it's Southern California. I think his total compensation was something like $10 million, according to reports in 2000. I want to say 2017 or 2018. Something that we predicted in our 2014 reports. We said, look, his compensation is going to go through the roof. And we essentially said most of what they're doing, what they were doing with their bond offering and these private transactions, was really designed to sort of veil, these stock option awards to management. And we said that would be at the expense of common shareholders. Now, I believe something like $5 billion in shareholder value has been destroyed during this time, and we still don't see any regulatory action. So our most recent release, of course, we called on the U.S. Attorney's Office for the Southern District of California to take action, if for no other reason than to protect investors. We'll see if that happens. We hope it does.
So you're still short the name?
Yes.
Jump over. Okay, so let's change conversation and go from Ligand. Let's go into value investing. And we know you're a value investor. You look through and you're doing the financial statements. You're not caring, about charts. And I respect that very much. In some instances, it works. In some instances, it's been very difficult, this type of market, because you see stocks that have crazy valuations continue to go up in price. And you see stocks that have reasonable or even cheap valuations continue to go down in price. I mean, one stock I know you've been in is Bed Bath & Beyond, and the stock obviously has been an underperformer for a long time. Is this one you're still sticking with? Does the valuation still look attractive to you? And what are your thoughts?
Oh, yeah, absolutely. So great question. So we do own Bed Bath & Beyond. And just moving back a little further to your earlier comment, so this market, which, as you know, is the greatest bull market by some accounts in history, is terrible for value investors, but it's also terrible for short sellers. So if you're a value investor with a streak of short seller, it's really challenging. But Bed Bath & Beyond is one of the things that young people should be thinking about, I think. In a market where generally everything you could say conservatively is fully priced and maybe aggressively priced, where would you find value like that? I mean, you'd have to believe the company was going to go bankrupt at these prices. So we've been buying it aggressively, and it's paying a large dividend. I overheard you talking a little bit about Macy's earlier.
Right.
So we're getting this really above average dividend on the stock, and it's trading about 50% of tangible book value. Now, the thesis that Amazon's going to put on the business, I'm not convinced. Because the revenues have generally grown. I mean, no retailer goes down the road without bumps in the road. So there's always going to be something like margin compression, or they'll miss a few quarters. But you're talking about a company with over 1,500 locations, about $1 billion in market cap, and throwing off close to that in free cash flow. Now, people look at the PE ratio, the EPS figure, and they say, well, geez, it went negative. But a lot of non-cash write-downs, I think they're being way too conservative writing down the value of their brand. I think part of the problem is that there's a change in executive management. That obviously will be resolved at some point. There will be a CEO who will come on board. And then, should the company really be trading at that sort of valuation? So almost $1 billion in cash, throwing off close to that amount in free cash flow, operating cash flow, and then a market cap at that doesn't make any sense. So I don't think it can stay that way. The company affirmed their guidance recently, a little bit lower, but still it's a cash cow. And I think, if probably it will be a takeout target. I mean, either a PE firm or, it could be Amazon, for example. I mean, just the locations alone serve as 1,500 different distribution facilities. So there's some changes in the way that these retailers handle their lease obligations. That also affects the financial reporting. But unless you really dig into it, I don't think the pessimism is warranted in this case. And I think it's an extraordinary opportunity.
I mean, there's so many retailers with the same story, it seems like, where, and we were just talking about Macy's, and you can talk about that if you want, but, you can just kind of go through the list. I mean, Macy's, 7.78% dividend, stocks at, are very near lows it hasn't seen for a long time. I mean, we were there in 2017 briefly. Nordstrom, 5% dividend, stocks trading at $29 here now. Yeah. It's like they're pricing all of these retailers, and I don't know if it's warranted or not. And that's why, I'm kind of more of a Momo guy, so I'm kind of hands off on some of this stuff, at least from a trading perspective. As an investor, I look at it and I think, oh, these are attractive dividends, and I like your story in that, but I'm scared that maybe some of these do go bankrupt. I mean, they're pricing a lot of this like some of these companies aren't going to exist. Like, what are your thoughts on Macy's?
Yeah, well, so I don't follow Macy's too carefully, but what I do know about them is that, so they're not trading below tangible book. Last time I checked. So there's a few things we're looking at, right? We're really getting super old school in the value. So we're saying we're buying something at, half of tangible book value, which in the case of a retailer, you could argue, you could say, okay, in a liquidation, maybe the inventory takes a 50% haircut. Well, the common would still be covered at that price, right? And then we're talking about enormous free cash flow. Now, I understand Macy's has a pretty significant real estate portfolio, but again, not a company I follow necessarily. But we are getting so conservative in our view to security analysis. And again, and within the context of a 10-year bull market, the Dow drops 1,000 points, like you point out, and people might say, well, could this be the bottom? But you're talking about, didn't the Dow go from like 6,000 10 years ago to 28,000? I mean, couldn't it easily pull back 3 or 4 or 5,000 points? And still, you could still say that was an extraordinary bull run. So what would happen to a lot of issues if that happened? So for the value investors, right, they're always thinking in terms of a margin of safety. That's a critical component of their way of thinking. And it's not that hard to figure out. So again, if you're looking at an entity like Bed Bath & Beyond, not totally perfect. It's not like when we were buying Hibbett Sports in 2017. We talked about it on your show, where they had no debt. But the debt is certainly manageable at Bed Bath & Beyond. It's not very expensive. And if we're buying it for 50% of tangible assets, the operational issues, Bed Bath & Beyond, I kind of liken to Best Buy's some years ago when Best Buy was facing operational issues. They're not that hard to solve. I think they will be solved. And then you've still left with a company throwing up enormous free cash flow. I mean, if you thought about it in terms of a piece of real estate, it's almost like saying, well, if you bought, let's say a commercial building for $1 million and they had $1 million in the bank and they were producing close to that every year in, rental income, like who would not buy that? And they had a 30-year financials you could study to show that that was consistent. I mean, when you get into those sort of metrics, there's really not that much risk, in my opinion. So you've really mitigated the risk of this enormous margin of safety. So, there were certainly things got a little unwieldy with the previous management team. They're gone now. I'm sure the board, I like the board members at Bed Bath & Beyond. They've got a reconstituted board. They're going to find new leadership, and I think this company's going to be just fine.
Before we let you go, we're getting up the clock here. S&Ps are trying to get off the mat here. We're now back in the 29 handle, down 14.5 handles. One stock you've been sticking with for a while, GEOS, Geothermal Systems. I sure hope you're paying attention to the trading range here, because this seems like it likes to go from 12 to 16, back down to 12 to 16. Yeah. Things aren't looking good for oil here. You've been sticking with this one as long as the Ligand short. Just give us an update on Geospace Tech.
Well, you can call us a lot of things, but you can't call us impatient.
No, that's
so it's Geospace Tech.
Nice.
But there's a saying, there's an old adage that the stock market is a mechanism for transferring wealth from the impatient to the patient. The trading range, as you say, as you call it, is really insane. It's irrational. But if you look at the underlying business, we've been right once again, just like Ligand. So really 3 consecutive years of growing revenue. And if you read their transcripts and their comments, and you read our annual reports, I mean, everything we've said has basically come true. So they're really record rental revenue on their OBX systems. They can't build the product fast enough. They recently said they're turning orders away. We've said for a long time, we think there's a very large order coming from Petrobras for a PRM system, which is a permanent reservoir monitoring, so a large cable array on the seabed to monitor permanently seismic activity. And you know what? We've been right every step of the way. I guess the people who are selling it don't read those things. It's incredible.
We've been on the line with Reverend Emmanuel Lemelson. He's the founder and president of the Leonard Foundation, sharing us his fundamental outlooks on the market. Reverend, great to have you on, and won't be so long next time.
Yeah, guys, really great to join your show. You're just killing it with your show, and I always enjoy listening to it.
Okay.
Have a great day. Take care.
All right, a little bit of a rally here, Dennis. What's bringing us off the bottom? You seeing anything?
Buy the dippers. They still lurk on everything here. I don't see anything, and we saw this on Friday. I had a good trade, just looking, that the balances weren't really justifying the sell-off. I'm kind of seeing the same thing again. I think you have a few people coming in saying, look, we're down 14 handles here. I'm not seeing any real major selling pressure here in the individual stocks, and maybe we're going to lift a little bit because of that. It's like the futures overshoot sometimes. And I think they overshoot lots of times. We see this in the after hours session where it's kind of a guessing game. I think when we were down 20 handles, how low did we get this morning?
We were down another 11 handles from here.
Yeah. So, it's just overshooting 24, 25 handles down. You look and you're like, there's still a lot of people who are buying dips. And I mean, this has been a fade trade market. I mean, it's really paid off. And really, when you look, and Kolb tweeted out some returns there from the last couple of years, and you look at those returns, and I could actually go grab my Twitter stream if I could figure out how to see my own tweets, which takes me a second because I can't figure it out. Okay. But I'll just tell you this from Matt Kolb, and he took this from somebody else. I'm not sure who he took it from, but in the 564 days and Matt Kolb is Benzinga. So in the 564 days since Trump announced his first tariff, the S&P 500 is up 3%. The Dow Jones Industrial Average is up 0.28%, and the Russell is down 5.7%. So really, you're talking in the last year and a half, we've really gone nowhere in the S&P. Yes, we made a new high there briefly, but really, we have been in, you could call it a digestion period, you could call a lot of stuff, but we've kind of just been trending. So, or just chopping back and forth. So really, the fade trade has worked very well in the last year and a half, where if you've been buying dips, it's been working, but it's also been working if you've been selling rips. So, I mean, I don't see, I see the same type of market where we sell off 25, 30 handles, and then we lift a little bit, and then we sell off a little bit, and then we lift a little bit. I mean, maybe you're early when you're buying the first dip, but it seems like eventually when you're down 4 or 5%, they buy the dippers lurk, and then they come back, and the market rolls back. So, unless you're in some of these stocks, like obviously we were talking about a few of these earlier that have just been continuing to trend down, the overall market has really had no trend at all.
And just to, look at the price action from last week, I mean, overall, market made one hell of a recovery. And I believe on Thursday, we actually got positive for the week in the S&Ps. Our close a week ago Friday was 3250. On Thursday, we got to 2940.50, close at 2940. We looked just as strong as can be, and then the tweetage came in and took us down. So I think for me, it's like I like to take a daily or even a weekly perspective on the market. If we could just hang in here, if we could just hang out at 2,900, I think that would be a really impressive thing for the market with all the volatility that we had last week. If it could just have a little breather. I know historically, August is a rocky month for the market, and so is September here. But I think all the damage that was done earlier in the week to have it come back on Friday, or it was on Thursday,
Wednesday and Thursday.
Yeah,
very impressive.
Yeah, so
that two-name rally. Look at the low from Wednesday, 282 on the SPY, up to the high on Thursday, 293. That's 110 S&P handles equivalent. 110 S&P handles in basically 1.5 trading sessions. That's incredible. Incredible volatility.
And if you go to
like I said, this is great for trading, like a great trading environment here when you get this kind of volatility. But as an investor, you scratch your head and you're trying to figure out, and you really got nowhere. Like as an investor, I said, like in my NVIDIA position, just even looking over the course of the last year that I've held it, I've been up, I'm down, I'm up, I'm down. And, there's a lot of stocks that are like this, and really they've gone kind of nowhere in the last year and a half. So it depends on what hat you're putting on. But as a trader, maybe that's what you got to be doing. I think you're still just, the fade trade is on.
And if you look at the low, which was actually Tuesday's low, but it took place Monday night at 2775.75. You had 170 point rally off that low from that Tuesday night low. You never caught that during the regular session, but we'll keep the focus on 2,900 for the remainder of the week. We're coming up at the end of our first show here with Seth. How you doing, Seth?
A few hiccups, but
a few hiccups.
He's good. He did a good job.
Yeah.
Figuring it out. So
just wait. Yeah, when I run it, there's at least a few hookups there. But
I don't run it because it would be all hiccups, so that's why I don't run it at all.
All right, you want to wrap up today's show and let us know what's on the docket for Tuesday.
Yeah, so tomorrow we are going to have Nick Shaheen. He is one of the mavens on the MarketFi Maven platform that Benzinga hosts. So catch us tomorrow with Nick Shaheen and all of the great trading he does. If you miss any part of today's show, you can listen to the whole thing again on our podcast. Find us on iTunes, SoundCloud, Google Podcasts, TuneIn, and Stitcher by searching PreMarket. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. That's our show for today. Thanks for listening, and we will be back with you tomorrow morning.